Let me tell you something most traders will never understand. The biggest money I ever made in the market did not come from being the smartest man in the room. It came from something far simpler: patience and discipline. You see, most traders believe success in the market comes from finding new strategies, new indicators, or secret systems. But after years of winning, losing, and winning again, I discovered something powerful. You only need one strategy, but you must follow it with unbreakable discipline. And today, I want to tell you the story of how that lesson changed my life and my fortunes. In my early trading days, when I first started, I wasn't a legend. I was just a young boy studying numbers on a chalkboard in bucket shops. I watched prices move up and down all day, and slowly I began to understand something. The market moves because of people, their fear, their greed, their hope, their panic. And if you learn how people behave in the market, you begin to see patterns. But here's where most traders go wrong. They think trading is about constant action: buying, selling, jumping in and out of the market. But the market taught me a different lesson, a painful one, a lesson that cost me a fortune. There was a time when I lost millions, not because my strategy failed, but because my discipline failed. I ignored my rules. I let emotion take control, and the market punished me. That day, I learned the most expensive lesson of my career. A trader's greatest enemy is not the market. It is himself. After that loss, I made a decision. I stopped chasing ideas. I stopped listening to noise. Instead, I focused on one simple truth. The market moves in trends. When a trend begins, it often continues far longer than people expect. So my strategy became simple. Wait for the market to show its direction, then follow the trend. And once you are right, sit tight. Because the big money is not made in buying or selling. The big money is made in waiting. Let me tell you about one trade that proved this truth. The market had been quiet for weeks. Most traders were bored. They kept trading small moves, losing money again and again. But I waited. I watched the price carefully. Then one day, the market broke above a key level. Volume increased. Momentum appeared. That was the signal. I entered the trade, and then I did something most traders cannot do. I did nothing. I held my position. Days passed. Weeks passed. The trend continued. And that single trade made more money than months of constant trading. That is when I knew patience is the trader's greatest weapon. The market is not just numbers. It is a reflection of human nature. When prices fall, people panic. When prices rise, people chase. And the crowd is almost always wrong at the extremes. Successful traders learn to do something difficult. They think independently. They trust their strategy, and they control their emotions. Let me be clear about something. Strategy is important, but discipline is everything. You must follow your rules even when it feels uncomfortable, even when everyone else is doing something different. Because trading success comes from consistency, doing the same correct thing again and again for years. Most traders fail for a simple reason. They cannot control themselves. They overtrade. They chase losses. They abandon their strategy after a few bad trades. But the market rewards those who remain calm, patient, and disciplined. Let me tell you something. The market taught me over many years. Impatience is the most expensive habit a trader can have. I have seen brilliant men lose fortunes, not because they lacked intelligence, but because they lacked patience. They wanted action. They wanted excitement. But the market does not reward excitement. It rewards discipline. You must understand something important. The market does not move every minute with opportunity. Most of the time, the market is simply noise. And if you trade the noise will take your money. That is why I learned to wait. Sometimes for days, sometimes for weeks, sometimes even longer. Because when the right opportunity comes, it is worth the wait. Many people ask me, how do you know when the time is right? The answer is simple. You watch, you observe, you study how the market behaves. A trader must learn to read the market like a book. Every movement in price tells a story. A strong rise with heavy volume tells you buyers are confident. A sudden drop tells you fear is spreading. And when the market hesitates near important levels, that hesitation often comes before a major move. But understanding these signals requires patience. The impatient trader sees movement and jumps in. The disciplined trader waits for confirmation. One of the greatest mistakes a trader can make is following the crowd. The crowd is emotional. The crowd reacts to news. The crowd panics. But the market often moves in the opposite direction of the crowd. When everyone is excited, it may be time to be cautious. When everyone is afraid, it may be time to look for opportunity. I learned long ago that profitable trading requires independent thinking. You must trust your analysis, not the noise around you. Now, let me tell you something important. Even the best traders lose money. I lost many times in my career, but the difference between a professional trader and a gambler is simple. A professional controls losses. A gambler lets losses control him. When a trade goes against you, you must accept it quickly. Close the position. Take the loss. Move on. Never argue with the market because the market is always right. In my years of trading, I disc. Overed something powerful. Your first priority is not making money. Your first priority is protecting capital. Because if you protect your capital, you will always have another opportunity. But if you lose everything, the game is over. That is why every trade must have a limit. A point where you admit the trade is wrong. That point is your stop loss. Many traders refuse to use it. Their pride tells them the market will return. But pride is expensive in the market. Discipline is far cheaper. Another mistake traders make is cutting profits too early. They become afraid. They see a small profit and rush to take it. But the real money in trading comes from big moves. The kind of moves that happen only a few times each year. When you catch one of those moves, you must allow the trade to grow. This is where patience becomes powerful again. Because holding a winning position requires emotional control. The market will fluctuate. It will test your confidence. But if the trend remains intact, you must stay in the trade. Trading is not just a financial battle. It is an emotional battle. Fear tells you to exit too early. Greed tells you to risk too much. Hope tells you to hold losing trades. And frustration tells you to revenge trade. If you cannot control these emotions, the market will control you. But if you master your emotions, you gain a powerful advantage. Discipline is not something you find overnight. It is something you build through experience, through mistakes, through losses, through lessons. Every great trader develops rules that protect them from themselves, rules that keep them consistent. And once those rules are written, they must never be broken. Because the moment you break discipline, you invite chaos into your trading. Many people enter trading hoping to get rich quickly. But the market does not reward impatience. Trading is a long game. A game of consistency, a game of survival, a game where small advantages repeated over time create great wealth. Those who rush often disappear quickly. Those who remain patient often succeed. There is another lesson the market taught me, and it is one most traders learn too late. Timing. You may have the right idea, the right direction, even the right analysis. But if your timing is wrong, the market will still take your money. I learned this many times during my early years. I would study the market carefully. I would know that a stock was likely to rise, but I entered too early. And before the move began, the market would shake me out. That is when I realized something important. Being right is not enough. You must also be right at the right time. The market has a rhythm. It breathes, it pauses, it accelerates. And the patient trader learns to move with that rhythm, not against it. Most people underestimate how difficult waiting truly is. Waiting sounds easy, but when you are watching the market every day, when prices move constantly, when others around you are making trades, waiting becomes extremely difficult. Your mind begins to whisper, maybe you should enter now. What if you miss the move? Everyone else is trading, but the disciplined trader understands something the crowd does not. Opportunities in the market are like buses. If you miss one, another will come, and often a better one. So instead of chasing the market, I learned to let the market come to me. The market has a strange way of testing traders. It tests your patience. It tests your confidence. And most importantly, it tests your discipline. There were many times when I entered a trade correctly, but the market moved slightly against me. Not enough to invalidate the trend, but enough to create doubt. And that doubt is dangerous, because doubt leads to fear, and fear leads to poor decisions. A trader must learn to distinguish between normal market movement and a true change in trend. That ability comes only with experience. One of my greatest advantages as a trader was observation. Before I ever placed large trades, I spent countless hours simply watching the market, watching how prices reacted to news, watching how stocks behaved near resistance, watching how panic spread during market declines. These observations built something powerful in my mind: pattern recognition. Over time, I began to notice repeating behaviors, the same emotional reactions, the same cycles of optimism and fear. And once you recognize these patterns, you begin to anticipate them. Another truth about the market is that it moves in cycles: periods of optimism, periods of fear, periods of quiet consolidation, and periods of explosive movement. The inexperienced trader tries to trade every cycle, but the experienced trader knows something better. Certain phases of the market offer far greater opportunity. For example, when a strong trend begins after a long consolidation, that is when major profits are possible. But during choppy markets, discipline demands patience. Sometimes the best trade is no trade at all. Confidence is essential in trading, but it must be the right kind of confidence. Not arrogance, not overconfidence, but quiet confidence built on preparation. When you have studied the market, when you have tested your strategy, when you have controlled your risk, confidence becomes natural. And that confidence allows you to do something most traders cannot do: hold your position when the crowd begins to panic. Let me tell you about one of the most intense moments of my career: a market collapse, prices falling rapidly, panic everywhere, traders shouting, newspapers filled with fear. Moments like that revealed the true nature of the market. They also revealed the true nature of traders. Many traders froze. Others made emotional decisions. But those who remained calm, those who followed their strategy, found enormous opportunity. Because panic often creates the biggest price movements, and those movements can create life-changing profits. There is a difference between a gambler and a trader. A gambler hopes. A trader plans. A gambler follows emotion. A trader follows strategy. A gambler reacts to the market. A trader anticipates it. Most people who lose money in the market behave like gamblers. They chase excitement. They chase rumors. They chase fast profits. But professional traders behave differently. They think in probabilities. They understand risk, and they remain calm under pressure. If there is one skill more important than strategy, it is mastering your mind. Your thoughts will influence every decision you make. Your fears will tempt you to exit too early. Your greed will tempt you to risk too much. Your frustration will tempt you to break your rules. And if you allow these emotions to guide your actions, the market will punish you. But when you learn to observe your emotions instead of reacting to them, you gain control. And control is the foundation of discipline. After many years in the market, something changes. You begin to develop a trader's instinct. Something interesting begins to happen. You develop instinct, not guesswork, not emotion, but instinct built from thousands of hours of observation. You begin to sense when a market move is genuine. You begin to recognize when a rally is weak. You begin to notice when the crowd becomes too confident. This instinct does not replace strategy. It strengthens it, and it helps you navigate uncertain situations. Experience is the greatest teacher in trading. Books can teach you concepts. Mentors can teach you strategies. But only experience teaches you how the market truly behaves. And experience often comes through mistakes, losses, painful lessons, moments when the market humbles you. But if you learn from those moments, they become valuable. They become the foundation of your future success. There is something about the market that few people talk about: the silent moments. Moments when nothing seems to be happening. Prices move slowly. Volume disappears. News becomes quiet. Most traders hate these moments. They feel bored. They feel restless. They believe they must do something. But these quiet periods are often the moments when the market is preparing for its next move, and the disciplined trader understands this. He does not force trades, he observes, he prepares, because in the market, preparation always comes before opportunity. There were many times in my career when patience rewarded me more than intelligence. I remember watching a stock that had been trapped in a narrow range for months. The public had lost interest. Speculators had moved on to more exciting opportunities. But I continued to watch it carefully, because sometimes when the crowd loses interest, the market begins preparing for something significant. Day after day, nothing happened. Weeks passed. Then one morning, the stock broke above its range with unused annual strength. That was the signal. Not rumors, not predictions, but price itself. I entered the trade with confidence. And what followed was a powerful trend that lasted far longer than anyone expected. This is why patience matters. Because the biggest opportunities often come after long periods of quiet. One of the most common mistakes I have seen is excessive trading. Many traders believe success comes from taking many trades, but the market does not reward activity. It rewards accuracy. Taking many trades increases mistakes. It increases emotional decisions. It increases losses. The best traders I have known often trade less than others, but when they do trade, their decisions are deliberate. Their timing is precise. Their discipline is unwavering. No trader is bigger than the market. Not me, not anyone. The market has humbled the greatest minds in finance. It has destroyed fortunes. It has punished arrogance. I have experienced this personally. There were times when success made me overconfident, times when I believed I understood the market perfectly. And those were often the moments when the market reminded me otherwise. Losses returned, mistakes appeared, and humility returned with them. That is why a trader must always respect the market. Confidence is necessary, but humility is essential. Another habit that helped my trading was routine. Every day, I studied the market carefully. I reviewed charts. I examined price movements. I asked myself important questions. Is the trend strong? Is the market weak? Is this movement genuine or temporary? These questions guided my decisions, and routine helped remove emotion from the process. Because trading should never be impulsive. It should be thoughtful, methodical, and calm. There is a special moment in trading, a moment when preparation meets opportunity, a moment when analysis becomes action. That moment requires conviction, because once the opportunity appears, hesitation can be costly. Many traders hesitate when the moment arrives. They doubt themselves, they fear loss, and by the time they decide, the opportunity has already passed. But the disciplined trader acts when the signal appears, not recklessly but confidently, because the preparation has already been done. True trading success is not built in a single trade. It is built over time, trade by trade, decision by decision, rule by rule. Small advantages repeated consistently create powerful results. This is something the impatient trader rarely understands. They search for one lucky trade, one big win, but professional traders think differently. They think about consistency. Consistency leads to confidence. Confidence leads to discipline, and discipline leads to profitability. Discipline does not feel exciting. It does not create headlines, but it creates results. It is the quiet force behind every successful trader. Discipline means following your strategy, even when emotions try to interfere. Discipline means respecting your stop loss. Discipline means waiting when there is no opportunity. And discipline means holding a winning trade when fear whispers to exit. Without discipline, strategy becomes useless. With discipline, even a simple strategy can become powerful. Over the years, I realized something fascinating. Markets change. Technology changes. But human nature never changes. Fear still drives panic selling. Greed still drives reckless buying. Hope still keeps traders in losing positions. And impatience still causes traders to enter too early. Because human emotions remain constant, market behavior often repeats. And that repetition creates opportunity for those who understand it. After many years in the market, after fortunes gained and fortunes lost, I discovered one simple truth. Trading success is not about sitting the future. It is about responding to the present with discipline. The market will always move. Opportunities will always appear. But only those who are patient enough to wait and disciplined enough to act correctly will capture them. So remember this lesson. Do not chase the market. Let the market reveal its intentions. Prepare yourself. Control your emotions. Follow your strategy. And when the moment finally arrives, act with confidence, because the market rewards those who combine patience with discipline. And that combination has the power to create life-changing profits.